Hi, I'm Eric Sepanek. I'm here with Damian White today. We're here to talk a little bit about what's happened in the last 30 days. Today is April 3rd, 2020. We're obviously in the beginning stages of the coronavirus lockdown. It's been really something profound for us as brokers. It's been the craziest run upon physical metals upon the public that we've ever experienced, and that's why I brought Damian here today, also to talk a little bit about his experience, because he's been brokering through this whole thing. So he's going to tell you a little something about spot price versus what the actual physical price has really been. And Damian, let me ask you, in your last 30 days, have you ever seen anything like this, trading gold, silver, the separation between the two? And can you explain a little bit about that?
Well, the overall market has just been insane. I mean, the demand and the fear from the public is really kind of unprecedented. I think there has been a couple other times in history similar to this. I think sometimes back in maybe 2011 and 2008 had similar elements of what we saw. And what I mean by that is that the prices of the physical market really didn't move, actually went up when the spot price of the market had dropped significantly. I mean, in some cases, on days it was down, upwards of 30 or 40%, trading down with the stock market. And that paper spot price, the liquidation in those markets, was causing an unrealistic drop in prices, where the physical boots on the ground type metal purchases was not reflecting that. Those prices were actually more, so it caused a very large spread between those two, which was what I found very confusing for the public when they're trying to buy it at artificially low prices.
Yeah, it really seemed like no one really got a true grasp, because we have so many phone calls of people like, oh, look, silver's only $13 today. I'll take a whole bunch of that. And then what was it that you'd have to say immediately when they said, yeah, I'll take 2 monster boxes of silver American Eagles?
Well, I mean, what we saw was the premiums on those products above the spot price was maybe 400% greater than it was the prior week. And so no one really did understand that. And, it's just how the market's pricing. And when the reality of being able to obtain the metals, I mean, it was a simple supply and demand. There was no metal to obtain. And the spot price was just artificial pricing, which we're starting to see it rebound, but it was confusing for the public to see that big of a dichotomy there.
I think one thing that I noticed with my clients was, especially when we start talking about the actual physical price, but the big deal was people that were dealing with, say, $20 Liberties, MS-62s. Those coins were so not only stable, but they were ratcheting up in a very methodical method, just like we had hoped and expected to see when we originally presented so many of these coins to so many of our clients. I found that that marketplace to me was bar none, like the MS-62 $20 Liberty market, 65 cents. I mean, across the board, those types of coins were just doing so well and doing their job to combat all the instability that we saw in the overall marketplace.
Yeah, I think you're exactly right. I mean, the lack of volatility is something that's really comforting for investors when they see that and their products didn't drop. There was not that tremendous spread between the two as well, so the premiums are made constant. Yeah, and I think a lot of our clients were really liking those products.
Yet the funny thing is, well, even though we're watching them spike real quickly, nobody's selling right now. I think maybe we had, especially with walk-in sellers, none were. I think we had one client. Other than clients, though, I want to say there was a handful of private sellers, but all the metal was going in the opposite direction. It really was going out the door, not too much in the door. So now let me ask you this. The job numbers came out. We are now at 10 million. The most astronomical spike. If you've been watching the news, you know they've shown charts that there have never been a spike like this in history. Now, what is your opinion? Because so many people say, well, once we turn the switch off to us being mandated to stay at home, this is just going to be a rubber back, snapback of the economy. Everyone's going to go back to work. There's going to be 100% rebound, and in a very short amount of time. What's your feeling on that?
Well, I think it's probably extremely unrealistic with the amount of job losses that we have, and all this financial support is being come out for a reason, and that's to help people bridge this gap. We don't know how long this gap of unemployment, lack of manufacturing, just the economic drop is going to last. I don't think we're set up for a situation where we had maybe back in December of 2018, where it was a V bottom, everyone saw it. It was a quick 20% drop in the equity markets and everything was back to normal. This one could have a little more lasting impact, I believe.
Well, not only that, I mean, we also have to consider the idea of how long this is going to last, because when you look at the Spanish flu in 1918, 1919, I mean, that wasn't a 1 month epidemic. I mean, that lasted over a year. And if you look at the history of it, I mean, there was so many lives lost at that point in time. I think if we saw even a fraction of that type of mortality rate with this time around, this lockdown could continue longer than we ever imagined. So, I mean, if that is prolonged, like let's say for an instance, let's say we're locked down for 2 additional months, where do you think this economy would go from there?
I mean, there's really no way to tell, but what I would say is that the pandemic is on top of something else, and that is basically it popped the debt bubble that the world has been fueling and running on for at least the last decade. I mean, you could argue farther back than that, but when you combine the two, and we were kind of in a situation where that was about to pop, or the economy was really slowing down, and with this, no one really knows. I would think that there are a lot of comparisons to the 1929 Depression era with how rapid the decline is in all measures of economic activity. And that if we had any kind of a similar outcome, we would be looking at something probably in the summer to the fall of 2022, I would say, for some kind of a noticeable rebound. I would expect more of an L-shape recovery rather than the V-shape that people are speaking about
and hoping for. Well, that's going to be it for us for today. Damian, thank you so much for sitting here and sharing some of your feedback. Appreciate that. You guys can follow us on our blog, and we'd be more than happy to continue these types of recaps through this whole entire crisis. Thank you very much, and we'll see you soon. Everyone stay safe.